So let's say Emmanuel were to sell this property, he's got a £300,000 gain, yeah?
Yeah.
So he's going to have to pay a ton of tax. Yeah.
So there's no principal residence.
No, let's forget you lived in it. Let's forget you lived in it. Okay? So this is an investment property and Emmanuel wants to sell it. He's going to pay a ton of tax. Yeah? And this is his only property and he's saying, I don't want to pay 28% on 300 grand, which is best part of 80 odd thousand pounds, yeah? What else can I do? What he could do is he could transfer it or change it into service accommodation, run it for 2 years, then sell it, and let's say he's going to make a gain of 300 grand. Make a gain of 300 grand, claim entrepreneur's relief, only pay 10% tax because now he's selling his business as opposed to a property, so he'd pay £30,000 in tax as opposed to 80 grand. Everybody follow that? Because as long as you meet the rules for service accommodation, it's now treated as a trade for certain tax purposes. For entrepreneurs' relief, it's treated as a trade. So service accommodation is not a trading business, but it gets certain tax reliefs based on whether or not it meets the tax rules. So as long as you meet the rules for 2 years, okay, you could sell it as a business, only pay £30,000. That could be an option for you going forward if you change it into service accommodation. Okay, that's your first option. Your second option, which Helen kind of covered, is you've got your principal residence relief. So you could sell that property to your limited company and there's no capital gains tax to pay because you've lived in the property during the entirety of the ownership. Okay, you'll have some stamp duty, land tax consequences. Okay, but that's going to be nowhere near the £900,000 you're talking about. So you might want to transfer this into a limited company. Yeah? So transfer your property.
Sell the property to...
Yeah, by transfer I mean sell, yeah. Sell it to your limited company. There's no capital gains tax to pay. You'll have some stamp duty, land tax to pay. It's going to be a very...
Shaz has got a mortgage on it.
Yeah, that's what I'm saying. So he's got stamp duty, land tax to pay. Yeah. No capital gains tax because he lived in it, but SDLT to pay, yeah? But that SDLT is nowhere near what he's going to pay on the £900,000 home which he's going to buy for himself. Yeah, so it's.
Well, won't he have to refinance with a limited company?
Yeah. He will.
Refinance is up to 75% of value. You've got £137,000 coming back to then use for other property projects.
Yeah. So here we're not talking about the cash, but Andrew's right. We're just talking about. Emmanuel's question was, how can I reduce the amount of SDLT to pay? And the way he framed the question was, he's not averse to paying some stamp duty land tax, as long as you can save on paying the additional 3% on the 900 grand. So once this moves into a limited company, no capital gains tax to pay, some SDLT to pay, so now you...
The company is paying. Yeah,
the company is paying. Now you don't own any properties. So the next property that you buy, that you're going to live in, okay, no extra 3% to pay.